I'm not surprised that we had an earnings and a revenue miss, right? Because just look at what crypto did in the quarter. The market cap, the total crypto market cap fell 60%. So, but it was kind of disappointing across the board in terms of lower transactions, and that had to do with mix because it was more institutional versus retail. I think the only bright spot, Melissa, was the average fees were up sequentially. So that's a good thing, right? Because people are worried about the exchanges in general and seeing fee compression. But I think that's just that's going to come eventually. But for the time being, that's the only bright spot that I saw within the quarter.
So the next shoe to drop probably is just fewer fees. I mean, that's the issue with Coinbase is that it is still transaction revenue focused. That's really the core of the business, and the mix. You pointed out the mix a little bit more institutional, but it's actually more. It's overall, it's more retail driven in terms of the kind of trader, and that's exactly who's pulling out of the market right now.
And you can't really value this stock right now, right? I mean, if you're missing earnings and you're missing revenue and numbers are coming down, it's really hard. Even though the stock is down 65% year to date. The interesting thing is the stock has rallied 40% from the lows, so I'm not surprised to see it down again today, after being down 10% yesterday. Sure.
Let's move on and talk about Twitter stuff. Elon Musk selling Tesla shares. It gives hope to Twitter shareholders. I'm wondering what you see for this potential deal.
Yeah. So I mean, Twitter's not trading on any kind of fundamentals at this point. And even if Elon Musk does get this company, he has a long way to go in terms of restructuring, monetizing, really changing the entire format. And that's going to take a really very long time, I think. So this, too, it's hard to value it because you just don't know what the model is going to look like even in 6 to 12 months from now.
Yeah. In terms of Disney, we're expecting that after the bell today, Steph, and there's a lot going on here in terms of the theme parks, and they're very busy right now, but there's a lot of pull forward going on in terms of maybe later trips are being done now, maybe trips that were postponed are being done now. So it's also there's not a normal going on for Disney, and then of course there's the streaming business.
Yeah, and the reason the stock trades at 28 times forward estimates is because of streaming, right? And if streaming is coming down and subs are challenged, then I mean, it's what do you want to value the stock at? I think the parks are interesting. It is part of the reopen, but is it a one and done kind of a thing? To your point, but we know that TV advertising is coming down. We know there's a ton of competition in streaming, and I just feel like maybe the 11 million sub number that we're going to probably get tonight is okay, but are they going to be able to do the 230 to 260 million subs by 2024? That is the biggest question. I mean, across the board, you've had disappointments in every streaming company this quarter so far. So I don't expect really anything great from Disney. The stock is down about 30% in the year, so maybe it can pop. But I think there's just too many question marks in terms of what they're going to have to spend to get those subscribers.
I mean, I think the math works out to more than 10 million subs added per quarter for the next 2 years in order to hit Chapek's forecast, which seems like a staggering number.
Yeah, and if they get it, that's fine. But at what cost? That's the problem, right? And that's the problem with the model. Right? So you can have the growth on the sub side, but again, if the margins compress, that's troubling, especially again at 28 times forward.